We're live. Hi, everybody. Thank you, Eric, so much for that brief introduction, because I went back and I read my bio and I said, there's no way possible that you're going to be able to read this. It's like 10 pages long. No one needs to know that much information about me. But my name is Dionne, as he said, and I have a quick question for everybody in the room. So who in here feels like they got a good handle on their business budget and business finances? We got one in the room. I'll take it. We got two in the room. What about your personal finances? Okay, so most of us with personal finances. Well, for those of us who said no or did not raise our hands, you were in the right place at the right time with the right people. So Eric had the honor of introducing me, but what he did not share is that about a year ago, I was getting ready to close my business and start over from scratch. I had made some financial mistakes at the bad advice of those that I trusted to help me build my business. And I said, wait a minute, all of this money that I've put into my company to get it started is depleting and the sales are not coming in. So what am I going to do? I was left with headaches. I was left with having to refile taxes and all of that great, wonderful stuff that we love to do as business owners. But God said, no. You got to keep going. And so what I am here to do today is hopefully impart into you and share with you some of the things that I wish someone would have tapped me on the shoulder and say, hey girl, do this instead of this, in order to make sure that my business has a good, solid foundation to work with, okay? Does that sound okay with everybody? Now I'm gonna put a disclaimer out. I am not an accountant. I am not a business banker. I am a budding entrepreneur, just like most of us here in this room, sharing with you some of the pitfalls that I had to overcome so that you don't make the same mistakes, okay? So what we're gonna talk about today are three specific topics. The first one being, how do you master your business finances? The second one, improving your personal financial health. Some of us neglect one or the other. Very few people that I have met are good at doing both, right? You're either great at keeping up with your business books, or you're either really great at managing your personal finances and you need a little assistance on the business side. So I wanna talk about both of those things, and also especially for the people who may be interested in obtaining capital for their business. I don't care what the experts on TikTok and Instagram say, you will have to increase your credit score, improve your personal financial health, if you want to leverage that in order to get funding for your business, okay? So that's a little disclaimer. And then lastly, we're gonna talk about financial security for you and your business. A lot of small business owners, we get caught up with trying to build the business, promote the business, let people know that our doors are open or we have this great product and service that we want to offer, that we forget that there are some financial things that we need to have in place as far as security goes. So we're gonna talk about those today as well. So, starting with the first one of mastering your business finances, step one to that is for you to learn your business. Learn your business inside and out. Not just your policies and your procedures or your terms and conditions. Learn your business inside and out. And that includes your financial health. And so what we're talking about is three specific things. Number one, your startup costs. How many of us have documented what we actually invested into our business from the start? We got 2 people, 3, 4. You guys are great. Maybe y'all can come up here and help me with this, okay? So when you are starting out, you're an investor in your business. And so all of the time that you've spent building your product, organizing and developing your service, sometimes we forget that we need to add things like that into our startup costs because we want to get a return on our investment, right? Like we didn't get into the business of becoming an entrepreneur or business owner to not make any money. But if you're not properly tracking your startup costs, what tools did you purchase to get the business started? Were there any capital investments that you made yourself into your business? You want to document all of that and keep track of all of that so that when your business does become profitable, guess what? You're not just writing yourself a check for payroll, you're writing yourself to get a return on your investment, but we want to make sure that we document and keep track of everything. So if you haven't already done this, I would recommend going back and just thinking back like, man, what did it really take for me to get to day one of my business being open? What fees did I have to pay? What registrations did I have to pay, and all those different things? The second thing with your startup cost, you want to make sure you account for all of your registrations. Do you need a business license in the state, the city? Do you need an occupancy permit that you have to pay for every year if you decide to get a co-working space? Or I had to learn this post-pandemic, I actually needed to register my at-home business with my local township. No one had ever told me that. I was like, oh wait, they want my actual home address for my business and all of this other stuff? But that's something that I had to accommodate for and add into my startup cost. So the next thing is deciding on your financial structure. And what I mean by this is look at what your business structure is. Are you a sole proprietor? Are you an LLC? Are you an S corp, right? Because that will also help determine how do you need to organize your business finances and develop the structure for your operations. So here's what I will use as an example. My husband and I, we co-own our company, so we are a multi-member LLC, and we have an operating agreement. And that operating agreement details how we are to manage our finances. So it states how many signatures are required from the members if we decide to do a cash withdrawal over a certain amount. And it also details who can take out a loan in the business's name. Why is this important? Keeping in mind, if you want to build business credit for yourself or for your business, they're gonna ask for your operating agreement. And they're gonna say, oh, Mrs. Motley, we are so sorry. We are not able to put this loan in your name, or you're not able to take out this loan under your business name because your operating agreement says that 2 signatures are required. So we need Mr. Motley to come in, right? And so when you're thinking about how you wanna function and run your business, also take that into account for how your finances should be set up. Are you guys with me so far? All right, am I boring anybody? I don't wanna put anybody to sleep. I know this isn't the sexy stuff to talk about. The next one is your operating cash flow. And this one is a little bit deeper diving when it comes to operating cash flow. We know that cash flow is right money coming in and coming out. We all know that revenue is our what?
Profit.
She said profit.
The income is revenue.
Right, it's your sales income, right? So profit and revenue are, in fact, 2 different things. So let's talk about it. So your revenue is the money that you receive coming in from your sales. So if I was a candle maker and I sold my candle for $20, the revenue that I made was $20, right? But now that $20 has to go back into my business to pay for all of these things. Let's say $1,000, that's easier math than $2,000 or $20, right? So for my operations, those are my business expenses that I have to cover once I've made revenue in my business, not profit, once I made revenue, right? So your operating costs are basically the things that it takes to keep your doors open. What are your day-to-day expenses? What are your monthly expenses, quarterly, annually, or annual expenses, right? And then from there, you also have to account for payroll. How many of us are paying ourselves? Ooh, no, I'm kidding. Payroll. And I'm gonna pause here for just a second to talk about this one because what I have learned even from my own journey and other business owners that I've spoken to, we didn't wanna pay ourselves until we felt like the business was making a certain amount of money. And I had to have a heart-to-heart, or either my accountant had to have a heart-to-heart with me and say, girl, no, you should have been paying yourself from the very first sale that you made. You want to be able to account and document for all of those things. We can't wait and run our business for 3 to 5 years, right? Because that's still the average of like what it takes to get your business profitable. We can't run a business for 3 to 5 years and not have any income coming in. That leaves us in a place where we are probably still working another job and our business becomes a side hustle, or we have to take the plunge like I did and step away from our full-time employment to run our business full-time, right? But I had to account for like, well, what are my living expenses? How much do I actually need to pay myself? Knowing that let me know how many products do I need to sell, how many services do I need to provide in order to bring that revenue in for my company, right? So I want you all to start paying yourself. Now, some people will say, well, how much? And that's up to you. I pay myself around 35% because I want to make sure that I got money going back into my business so that it can fund itself. But the number's gonna be up to you, so we'll play around with the numbers here in just a second. The next thing is tax savings. Now, I do this for me personally, for my business, because I don't want Uncle Sam to knock on my door and hit me with the bill and be like, hey, you didn't pay your taxes. And I'd be like, oh my God, I didn't know, right? But we should know. So I leave a little portion set aside to cover for taxes, whether that be I have to pay sales tax, or if I have to pay legal fees. If I've hired an accountant or a bookkeeper to do an audit for me, I put that money in a tax savings account, and that comes out of my revenue. And then what we were talking about earlier, the profit. I also have a separate account that my profits go into. And so your profits are basically all that's left over after you've covered your operating expenses, you've covered your payroll, and you put a little money aside for your taxes. That's really what your profit is. And I put margin in the parentheses because sometimes people will say, well, or ask you, well, what is your profit margin? Well, if you do the math, if I sold $1,000 worth of candles, and if I'm setting aside 15% out of that $1,000 revenue for my profit, I have a 15% profit margin, right? Now we're gonna get into cost of goods sold. So, how many product-based businesses are in the room? Product, service? Are you all a service-based business or product? Is everybody service? This is amazing. I'm so excited. Okay, this is just my little breakdown. Let me pause for just a second. This is my little breakdown. So remember I said I pay myself 35%. So 70% of all of my revenue goes back into my business, with 35% going to cover my operating costs. So again, that's my day-to-day, my month-to-month, year-to-year expenses. I give myself 35% so that I can keep my husband happy, right? He's not the only breadwinner in the family. And then another 15% goes into my profit savings, and then another 15% into my tax savings account. So that totals to 100%, okay? Yes, ma'am.
How did you come up with this breakdown? Is this standard, or is this just what you feel comfortable?
It's what I felt comfortable with. And so I'll also share with you all a little bit of background story for me. I started my business in my dining room, and I did it as a passion project to help people get out of debt. My husband and I, we paid off over $83,000 in 19 months. And going through that process and going through that journey motivated me to help other people. I never thought that this was going to be a business. So I had to learn how to manage my business finances with the same intention that I learned how to manage my personal finances. And so with this particular number, I had to take a look at, well, what are my living expenses? Because I had to figure out some way to replace my income. So as a service-based business, my overhead was very, very low during the pandemic because we were all at home, right? So there was no office space that I needed to pay for. I didn't have any, electricity bills or anything like that I needed to pay for. Actually, a portion of that was being written off because I was working from home. And so 35% was a good benchmark for me. But what you're gonna have to do is take into account, what are your living expenses? What are the things that you need to cover? And do all of the math and the calculations to figure out, again, how many services do you need to provide? What services do you need to provide? What price point do they need to be at in order for you to keep the doors to your business open and for you to be able to make livable wages? So this number will change, right? Because I don't want my profit margin to stay at 15%. My God, no. I don't want it to stay at 15%, but it was just a starting place for me that I felt comfortable with. What was important for me at one point in time was that I didn't want to do borrowing. I didn't want to have business capital. I was so set on no, I'm gonna cash flow my business. And then when those funds started to deplete, I was like, no, I'm gonna leverage my personal income and we're gonna get some capital, right? So you can go both ways. It just depends on what you wanna do. But that number, these are just arbitrary numbers. So you can start here, you can play around with it. I have some friends that they're like, girl, I pay myself half, okay? Because I have done all that I can do. I'm giving myself a pat on the back. I'm doing half, right? But again, take into account, what exactly do you need for your business? What do you need for your living expenses? So I hope that answers your question. Are there any other questions so far? No? Okay. So the next thing is cost of goods sold. So no one pay attention to the product side because we're all service-based businesses. So for my service-based business owners, are you keeping track of your time and your labor? Oh, she said, girl, no. You are? What software do you use, or do you do it manually? Okay.
We always start with a manual system and then scale to whatever it's.
Yeah. You are not just providing service and documenting your time when you're before your customer. The time that you spend on Canva developing those graphics or coming up with those brochures, the time that you spend driving to the store to mail off packages, to pick up things for your business, when you sit down and you order office supplies, if you need pens or notebooks or all of those things, that is your time. So if you have not, I want you all to start today documenting your time. Even the fact that you're sitting here. This is work. You all are coming here to learn about your business, how to improve your business, how to scale your business. This is work for you. So if you've been here all week, or even if you've just been here today, document your time. That's a part of your time spent working in your business. Yes, ma'am.
You have a list of resources on what kind of best programs there are for that?
So I personally use HoneyBook to keep track of my time. And the reason I like HoneyBook is because all of my clients are, separated into their own files. And I can go into their file and I can start the clock, or I can manually put the time in that I've spent working on their files. Like if I'm following up with them, if I'm putting together an email for them, or I'm doing research for whatever product or service they might be interested in. So I document all that time. I'm sorry. HoneyBook. You can track it manually, and I also believe that QuickBooks does as well. What did you say, Tracy?
I'm sorry. It's a lot of automation that you can set up in HoneyBook.
Yes, absolutely. Absolutely.
They respond via email.
Yep.
Those will be written into their file. I love HoneyBook.
Yeah, it does all of those things. And so if you're a service-based business, programs or software like HoneyBook, Dusado, I think 17 Hats is still around. Those are some good programs to look into because you're able to track the work that you've done, the time that you spent for those particular clients that you have in your service-based business. So QuickBooks, I believe, does it as well. I don't do timekeeping through QuickBooks, but
I think so. I've been trying to find a few of my clients. What I do is I'm in their CRM systems. I'm trying to figure out if there's a program that automatically tracks how long I'm in their systems. Does that make sense?
It does make sense, but I have not heard of anything like that, and I am not a tech guru. So what she asked was most of the time that she's in her client's CRMs, and so she's trying to figure out if there's a way to track the time that she spent in their CRMs. Chris, can I point it to you? I know you're a tech guy. Look, I put him on the spot. Okay, yep, so we'll go with that good old Apple Watch time tracker. Yep, and so what I usually do, I will use my phone or I use my watch and I'll just set a timer and just document that. But that was a great question. So we want to account for our labor. We also want to account for our tools. So as a service-based business, this is going to get kind of wonky a little bit because as a service-based business, your cost of goods sold also includes your operating expenses. Right? So for example, we're talking about HoneyBook. HoneyBook is a software that I use in my business to keep track of my client files and send emails and communicate. But that's also a part of my cost of goods sold because I use it in order to provide a service to my clients. Are with me? Yes, sir.
Google has a screen time tracker tool that you can use.
Boom. Google for the win. If I can afford you, I will hire you, Chris. You're my tech man. So transportation and shipping costs. So transportation, again, getting to and from your client meetings. You should be documenting that either through tracking your mileage. I use QuickBooks to track my mileage. You can also do it by your gas receipts if that's what you choose to do. I also added shipping costs here because at one point in time I had an online course. And with my online course, a lot of my clients asked for a copy of the workbook that I was teaching from. They didn't want the downloadable, printable copy. And so I had to print and pay for the shipping to send them the workbook to go along with the online course at their request. Well, I added that into my cost of goods sold and make sure that I documented that because that was my time spent. It required tools that I use, and it also required my time and transportation and the shipping to get it sent. And then packaging, again, I don't know if anybody is still printing out business cards and handing them out. Most of us have probably transitioned to digital, but if you do packaging, thank you cards to your clients, if you do giveaways, even though you are a service-based business, if you have those freebies or products and things that you like to, that are physical products that you like to give away and you package them up, you want to account for that as well. And this is not an all-inclusive list because we just don't have enough time for that today, but this is just enough information to get you started, okay? Any questions? Comments, concerns, and heartburns? No? Okay. So the second part is budgeting every single month. And so we're going to walk through and kind of tie all of this in together because I know that was a lot, but we're going to tie all of this in together. So I have a sample of a budget sheet for your business. Can we all see that? Barely. I know. This is so bad. Okay, here we go. What about now? Are we getting there? We getting there? Okay, I might just have to scroll over. So within this sheet, you all can't see the tabs on the bottom. So there is a tab for your startup cost. So this allows for you to go back and document those things or items that you spent, purchased, invested in to get your business started. So as an example, I had to get my state license and I went back and I documented how much I spent to get the license. Also documented the actual amount that it ended up costing me. And these are arbitrary numbers, but you all get what I'm saying. Were there any owner investments or contributions that you or your business partner made? Did you have to get a co-working permit? Was there city registration? Did you do an Amazon order for your office supplies, notebooks, pens, pencils, file folders, all of those things? Did you get a website? How much did it cost to get your website started? That's all a part of your startup cost that you want to eventually get a return on your investment for, right? Did you hire a graphic designer to make your logo? Canva subscription, yes, sir.
So you said do it monthly, but website hosting is usually annually, and I think state license is also an annual expense. So
Right.
How do you account for monthly expenses or versus annual expenses?
So this is just for the startup cost, and I'm glad you asked that because that transitions us to the next one. So the next tab is your operating costs, and so that's where I would list all of my operating expenses. You all, I promise we tried to connect this before we got started, and it just did not. So to your question, for example, we got Bluehost, right? So for Bluehost, I pay that annually. And so what I have done under this list of operating expenses, I have listed that I pay Bluehost every August 30th, and here's the amount. And this is what it ends up being maybe on a monthly basis. So you have the option within your budget sheet to break it up month by month, or you can do it by year if that's what you decide to do. So I hope that answers your question. Okay, so going into your operating expenses, this is basically your running and working list of all of your expenses. This can change, right? Depending on the changes that happen in your business. So G Suite, that's something that I pay for every month. I've listed every single thing in here. Well, I shouldn't say every single thing. At the time that I did this, I listed everything that I was paying for and acquiring on a monthly basis, right? Or even an annual basis so that I would not lose track of that. So as you all can see here, I left a note for my Bluehost domain protection. That's not due until September 5th, but it's only due once a year. So I've notated that, okay, this is what this is when it's due, here's the amount if I wanted to set money off to the side to make sure that I can cover it every month. And then in that last column, that's what the annual fee ended up being. And so when you go back and enter all of these things in, you can determine, well, what are your monthly overhead costs? So that'll give you, again, that running total. Remember, we're talking about know your business. And a part of knowing your business and mastering your business finances is to be able to account for all of your operating expenses, even if it's something variable like your office supplies, right? I think I might be the only person that orders pens every single month because I just have a special brand that I use. And for some reason, I lose them all. Don't tell my husband. But if you order office supplies, or if there's any other variable expenses that you cover, like your owner's draw, right? And you can even put and kind of play around with this and test this out to see, okay, if I pay myself $2,000 a month, what would that really look like in my overhead? If I took that $2,000 out, I'm only at about $775 or $774 for my overhead costs. That's a number I can work with, right? We're a service-based business. Our overhead is primarily low unless you have a storefront or brick and mortar for your services, right? But all of that needs to be included under your operating expenses as well. So this is the way that you can go around and play with those numbers. The second or third thing I would say that's really important is your break-even number. Can anybody tell me how many products and services they need to sell per month in order to break even? So your break-even number is basically your total cost equaling out to your total revenue, right? It's basically zero. You're zeroed out, is what that is. Anything beyond that, that's where we get into really making the profit, right? So I'm gonna show you an example of how to calculate your break-even number. So keeping the example within this spreadsheet, let's say somebody call up a service to me that you provide. Thank you, Dr. Joe. I can't type with these nails. Services, right? So let's say your total fixed expenses in this example are $2,700 a month. How much do you charge for this service?
So that's variable because insurance, so I take insurance.
Okay, just give me a rough estimate.
Let's just say $65.
$65. So you pay $65. And what would you say your cost of goods sold is? How much does it cost for you to actually provide the service that you charge $65 for? I'll save you some time. Let's just say $20.
Oh, okay.
Okay.
Yeah, that was.
Right? So what this is saying, if you all can see on the screen, in order for you to break even and meet your $2,700, if you're charging $65 per service and it costs you $20 per service, technically you're making $45, right? You would have to do a total of 60 services of what this is. We'll say massages, right? You would have to do a total of 60 massages per month just to break even. So when you get to your 61st massage, then that's where your profit comes into play. Is that making sense? Y'all with me?
With the cost of goods for the 20, what is that considered again? The cost of
So that's going to be your labor,
okay.
right? So ideally, I'm going to pick on you because I know you personally. I'm going to pick on you. And we talked about this before, y'all. This is my actual chiropractor. So as soon as we're done, we're going to have a session because I have tension in my neck. Okay. No, I'm kidding. So we talked about this before. You cannot undercut yourself and buy yourself out of your business because you are afraid to charge your clients more. I got a finger snap in the bag. Hallelujah. All right? You can't do that because you're doing a disservice to yourself. Let's just say your cost of goods sold actually to provide this service, Dr. Joe, is a total of $100. So if we change this to 100 and you're only charging 65, you got to do 77 just to catch up, right? So this also helps you determine, am I charging the right amount to my clients for the services that I provide? And I'm willing to bet 100% of us in this room, including myself, at one point, we were only charging when we actively provided the service. We were not charging for the labor that we spent to provide it. Yes, sir.
Please explain again
With the break even?
Yeah, I'm country, like the second column from the.
Well, come a little bit closer, friend. We have a whole front row. No, I'll zoom in for it. I'll zoom in for it.
Total fixed expenses, is that like the stuff that they pay regardless of even if I'm selling the product or not?
Right, so your total fixed expenses from that other tab where we had a list of all of the operating costs, that is what it takes for you to keep your doors open. So just for you to say, hey guys, I'm here, and what's your name, Ori?
Yeah.
Just to say, hey, Ori is here, he provides
IT support.
IT support. It's gonna cost you $2,700 just to do that. right? And so that gives you a benchmark to figure out, am I charging the right amount? Am I accounting for everything in my cost of goods sold? You do tech. I'm pretty sure, like, you know, y'all move pretty quick, but you learned a lot, right? What if someone is asking you to learn a new software in order to provide a service, right? You have to keep up with your certifications. All of that is a part of your cost of goods sold because that all rolls into the service that you're providing. So you have to be able to account for that.
But it's not related to the cost of sold goods at all.
It is related in the sense that it's going to help give you a good benchmark for what you need to be charging in order to make a profit, right? So if it costs Dr. Joe $100 to provide her service, but she's only charging $65, she's never going to make enough to keep her doors open. She's not going to make enough, right? Like just to keep her doors open. We're not talking about anything else, right? And so again, this calculator helps you determine in advance what that is, or even go back and revamp it. I had to change my prices, y'all. And that's hard as a financial coach. I'm already talking about finances. I'm charging you for the services. So I had to be really, really careful about keeping my business overhead costs and my operating expenses very low so that it doesn't cost me so much and I'm overexerted and then I'm not able to charge my target market what I know they'll pay, right? Y'all with me? Anybody got any questions? Yes, ma'am.
I have a landscape company, and the way I base my prices on when they call me and tell me to go look at the property, you know, I would tell them I need to go look at it first, and it depends on what the condition of the property is. If it has been taken care of in a while, I have to charge them a first-time cleanup fee, and I tell them what that's going to be first, and then after that, then I tell them what it's going to be maintenance on a monthly basis.
Okay, but are you
Pretty much do that.
are you also charging for that assessment that you got to come out and do?
Excuse me?
Are you charging for that assessment?
And I don't.
Okay,
And maybe I should.
you should.
Because you know, people are kind of finicky with
Yeah,
landscaping.
yeah.
Lawn service because there are a lot of people out there. It's kind of competitive.
Mm-hmm.
I never thought about that, but that is something that I can consider.
Yeah, with service-based businesses, we are selling our expertise and we are selling our time. I don't care what the service is. Yes, sir.
I just was gonna throw out a super fast suggestion, not to interrupt, but one great thing you can do is charge for the assessment and then deduct it as a deposit off the actual purchase.
Yep.
If you choose to.
You can do that as well. And I do that, I'm glad you mentioned that because I do that for my assessments.
Can you say it again?
So for those who didn't hear, he was saying that what she could do for her landscape business is charge for the assessment and then deduct that from the final total for the service provided. And that's a good option as well, right, if you want to roll it in. For me personally, I do 15-minute consultations for free. My business coach is still screaming about that. But I'm like, it's 15 minutes. It's 15 minutes, right? If we get into 30 and I tell my clients or potential clients, there's no coaching on this call. We're just talking and have a conversation to see if we're even a good fit for each other, right? And so, again, you are selling your time and your expertise, not just the actual physical service. Moving into the actual budget sheet. So, oh my gosh, you guys, this is driving me crazy. Okay, so here is a sample budget. Can we all see that? Okay. So anytime that you do a budget, you want to try to accommodate for your estimated income first, and then we'll get into the expenses second because income minus expenses will equal, right, what our profit will be, right? So this spreadsheet gives you the ability to list all of the different services that you provide, right? Some of us, well, actually all of us, we're service-based. We don't provide just one service, right? We have consultation calls, we have assessments, we have the actual work, that we do for different products and services. We have different pricing packages. I have speaking engagements, workshops and stuff that we do, right? So all of that are ways to generate income. It's not just the sale of our products or services. I keep saying products, but we're services. But y'all get what I'm saying. And so you can actually come in here and play with this and say, oh, well, you know what? I have enough room in my schedule this month to do $300 worth of assessments. So that would be my goal. I can do about $1,450 of coaching. And then once you have that number, right, you have your total, your estimated total, and then as your income comes in, you can come back into this column and fill this out. Well, I only did $150 worth, right? On the bottom of that, this is where you list your operating expenses that you're going to pay for in that period. So this is, y'all can't see it, but it's a tab for September. And so I can document and say, okay, well, these are the expenses that I need to cover for the month of September. And you will do that every single month, right? Especially if you have quarterly or annual fees, you know, that are only paid a few times a year or once a year. You can go back in and document all of that and account for all of those things and hit your estimated income if you need to, right? And you'll also account for your cost of goods sold in this list as well. So for example, if you have a product that you're gonna use to help provide your service, for me, that would be a planner, that $1160 is my cost of goods sold in order to get that product out to my clients. I'm gonna account for that. And so now that I have this number, I got something to work toward, right? And keeping track of this and updating it regularly, which I recommend that we all spend at least an hour as business owners every other week on our finances and reconciling our books and all of that. But I can keep a running total of whether or not I'm gonna have a profit or a loss at the end of the month. So that they'll let me know if I'm gonna hit my goal or if I'm coming in a little bit under and I need to do some restructuring, right? Maybe I need to go harder for Black Friday, Cyber Monday, right? I need to push something. Yes, ma'am.
I have one question. So my service also includes maintenance of my equipment, and it also includes me purchasing other equipment. So how do I factor that in?
Let's talk after. Let's talk after. Because those are good questions. I don't want to get too far off on the tangent, but let's talk after. So the next thing is expense tracking or bookkeeping to go along with your business budget. Does anybody recognize these two items I hold in my hand? Matt is like, thumbs up, I got it, right? Everybody else is just smiling at me or just looking crazy. These are check registers. You can get this one, this pretty one. Men, I think it comes in different colors. I think there's a navy blue or a black for the men. But this is where you document what you've spent. Or you can go to your bank and get the little free one. I don't like this one because, you know, it's a little, but it works. You can do that. For many years, I used this one because this is what I was familiar with, because this is also what I use in my personal finances. I had to upgrade to this one because the business expenses be expensing. Okay. So this allows for you to keep track of your transactions. This is what it looks like on the inside. It's literally a ledger, right? You don't have to get the fancy one that accountants will use, because are there accountants in the room, by the way? Any accountants? No, okay, see. This will work. This will work. But you want to make sure you're documenting everything. And one of the other features that I like about this one, and this is not my product, by the way, so it's Amazon. There's a little pocket for me to keep my receipts in, okay? All right, so let's move on, because we're got about 20 minutes left. Okay, so the third step of mastering your business finances is to learn when it's time for you to scale up or scale down financially. So we talked earlier, as a business owner, you do not want to buy yourself out of your business. You want to make sure that you're documenting for everything. And you don't want to buy faster than your business is selling, all right? Don't get excited when you get your first big sale and be like, oh, snap, I can go get that new Apple computer. Don't do that, because that's what I did. And I was like, oh, snap, now I got to go back and sell about 300 coaching packages to pay for it. Okay? Set realistic goals that are intentional. If you have not broken into your first 5,000, please don't say, oh my God, 2024 is going to be the year that I make 50K. No, it ain't. And that's not to discourage you. It could happen. But be realistic. If you've hit 5, let's do 10, let's do 15, let's do 20, let's do 25, right? You need to know when to scale up and scale down. And if it also gets to the point where your overhead is really high, cut it back. It's okay. It's okay to cut it back. Another thing is to align your financial goals with your company goals. Some of us want to build our business credit. All right, so you're gonna have to do the work to manage your finances on a regular basis in order to get to that place. Companies want to not only just see what your profit and loss statements are, they want to see what your actual records look like. And on the personal side, they're gonna look at, yes, your credit report, they're gonna look at whether or not you have any collateral. Because how you handle your personal finances is gonna tell me how you handle your business finances and vice versa. They're both so closely related. If you wanna own a storefront to provide your service, start saving and putting your money away. Even if it's just that 15% out of the sales that you make. That's a goal, right? So you wanna align your financial goals with your company goals. And then my third one is to regularly assess your expenses and make any changes. We all have variable costs, right? When I first started with HoneyBook, it was $9.99 a month. Now we're up to $30 a month. That caused me to have to go back and change my pricing for my clients, right? So don't worry about the variable costs. You can always go back and change it. And then even asking yourself, do I need a new contractor or a manufacturer or a vendor? Be looking regularly, right? Continue to do your research. All right, so let's quickly get into mastering or improving your personal financial health. So these are really simple. You need to know your household budget. And for anyone that needs it, I have a sample budget sheet and account list and all the other stuff that I can email you guys. But you want to get a good handle on knowing your household expenses as well. I tell my clients all the time, just like you write down all of your operating expenses for your business, you need to write down the operating expenses for your household. My husband and I were so business savvy. We treat our home like it's, the headquarters for the Motley Legacy. All right? So everything gets documented, everything gets accounted for. Another thing is to create a monthly budget. Shocker, she's a financial coach. She told us to create a budget. Right? Create a budget for your personal expenses as well. Why is this important? When you are more in tune with what's going on with your personal finances and you know what your expenses are, that's going to help you figure out how much you need to pay yourself. All right? And I talked about that earlier. How much do you really need to bring home? What are your living expenses? I know as business owners, we want to hit the 6-figure, 7-figure. All of that sounds great, but a lot of people hit those goals and they hit those milestones, and then they don't have any more money to show for it because they weren't properly managing their personal finances. So I don't want you to only win in your business finances. I want you to win in your personal finances too. You got to hold on to the money, right? Pay down your debt when possible. Clean up your credit report when possible. LexisNexis is a good product, a good service to have to figure out what is really actually being reported. They actually tell more information than the 3 credit bureaus do. Do you have any old addresses that are associated with your name that affects your credit? Is your credit locked? Right? Can anybody just go in and get your information? Or do you have identity theft protection on your credit score? Right? That's important. Lastly, simplifying your money with 3 accounts and paying yourself. So simplifying your money with 3 accounts, just like for our business, we have an operating account, we have a tax savings account, and we have a profit savings account. I have the same with my business, with my personal, I have an operating account, primary checking account for my home. My second account is my emergency fund. And then my third account is like my little fun money. That's my profit. It's my little fun money, right? And so the same thing. I'm not one of those financial coaches that's like, girl, get you 10 different accounts. Get one for the house, get one for the dog, get one for Christmas, get one for vacation. That's not me. We got 3 accounts and we're simplifying the process. Money should not be stressful for you, whether it's your business or your personal finances, right? Yes, it helps us live the lifestyle that we want to live and build the life that we want, but it should not be stressing us out, okay? And then again, pay yourself, give yourself an allowance. So financial security for you and your business. How many are commingling their business and personal funds? Let's see. I have my account on standby. I said, how many of you are commingling your business and personal funds, like it all goes into one account? Or do you have a business bank account?
It's not a business account.
Was that a yes? You got it.
No, it's a really bad idea
It's very bad. They absolutely should be. And here's the reason why. Even if it's just temporary, and you're like, oh, well, they just send me the money through Cash App, and I'll take the money and I'll put it back in my business account. That's a bad thing, because when you do that, you forfeit your legal rights as a business owner. You forfeit your legal rights as a business owner when you commingle those funds. She said, I'm not commingling. You want to make sure that you keep a trail, whether that's a paper trail or an electronic trail. All right. So I'm not opposed to, like, the transfers and all that other stuff, but I mean, keep them to a minimum. When I pay myself out of my business, I write myself a check out of my business account. I have a paper trail. It's easy for me. It's easy for my accountant. Right. The next thing is, let's see, what do we got here? Build an emergency fund for yourself and your business. I already said that. 3 to 6 months of your expenses are good for your personal. You can do the same for your business if you want. It's not going to hurt you. Hire an attorney. All attorneys are not created equal. Do not get an intellectual property attorney to represent you in court over an accident case, because they're not going to know what they're talking about. Okay? So you want to make sure that you not only have someone that is invested in helping you protect your business, whether that be helping you apply for a trademark, whether that be copyright, whether that be helping you get general liability insurance, right? And making sure that you have the right coverage. An insurance agent or broker can do that as well. Establish a relationship with a banker for your business and your personal accounts. I cannot tell you how helpful it has been to have a business banker that will dreamcast with me and help me get to where I want to get to, all right? They'll help tell me, like, hey, if you can make just another $1,500 in your profit, we can get you in XYZ, all right? So build that relationship. Get identity theft protection and lock your credit report. Lock your credit report. Get general liability insurance. I didn't know that as a service-based business that I was going to even have to get general liability insurance, but that helps cover me if for some odd reason a hacker gets into my system, gets into Honeybook, and they steal my client information. I'm protected, and I have insurance to protect my business if that said person should come back and unfortunately file a lawsuit against me, right? I have protection. So that's what general liability insurance can help you with. And then applying for your trademark and copyright, that helps protect your business. Just because you are a service-based business and you're providing services and you've been the only one in your area providing services does not mean that you don't need a trademark. And as soon as you feel like you're getting some traction, I would definitely have a conversation with an IP attorney, intellectual property attorney, to figure out what the best course of action is going to be. You can also go to uspto.gov and do some research on figuring out what you actually need for that application for your trademark. Please protect your business. US, U as in unicorn, S as in Sam, P as in Paul, T as in taco, because I'm hungry. USPTO, O as in olive, okay, .gov. All right, hire an accountant and a bookkeeper. I'm not a bookkeeper. I hired one. I know a financial coach has a bookkeeper. Yes, you all have heard it here today. I hired a bookkeeper to help me manage my business finances, to make sure that I wasn't making any mistakes, to make sure that my balance sheet balanced every year, to make sure that my profit and loss statements were correct, and that I had every single transaction documented. So if you are not feeling comfortable, you don't want to take this task on yourself, don't be afraid to reach out to someone, but make sure that you are investing in the right attorney. I had to learn this the hard way. I told you I made some business mistakes. I had one accountant tell me that I needed to turn my business into an S corp before it was actually time for me to turn my business into an S corp. So you all can imagine what that process was like to reverse that. It was timely and very, very expensive. And then I had another accountant who did my taxes for me that didn't realize that my balance sheet was wonky and still filed my taxes anyway, and we had to go back and amend those. It was very timely, very costly. So just because they say that they are an accountant, ask them, well, what type of accounting do you do? Are you a certified public accountant or are you a tax accountant? There's a difference, okay? So this is just a quick recap for you all. So let's chat. We got 10 minutes, 9 minutes. That's all that I have for you all today. I hope you all enjoyed this presentation. I'm done. Anybody have any questions?
Oh, we can clap first because I didn't hear it coming.
Ah. Thank you.
Thank you for the presentation today. It was very insightful because numbers really give me a headache. But the one question that I did kind of have, just to clear up some of the confusion, what is overhead?
So overhead is, again, like just your operating expenses. It's just another term.
Okay.
So again, your monthly expenses, your, what it takes to keep your doors open. I'm sorry, y'all. I know that was a lot. It was a lot to process. Yes, ma'am.
I believe you mentioned something about you were an S Corp and then you went back to an LLC.
Mm-hmm.
Why was that, and when do you recommend someone going into the S Corp?
So just based on, when you're an LLC, you can either file as a S Corp corporation or just a multi-member LLC. And so one of the accountants that I was speaking with was kind of doing vision casting for me. And he was all about like, let's get you the best tax breaks, right? But he advised me to do it too early before I was actually scaling my business. And we went through and filed with the IRS to say, okay, hey, we are LLC, but we are now an S Corp. And so the reason that ended up being costly is because when you switch your business to becoming an S Corp, you are required to pay yourself reasonable wages, which means that whatever the salary is, or what we call it, the median salary is for your service that you provide in your field, you need to be paying yourself at least that. So let's just say it's $50,000 a year. You're a chiropractor. Let's say it's $80,000 a year, right? If your business is not scaling enough to pay you $80,000 a year and keep the doors open, it's going to look like to the IRS that something is going on. That maybe you're trying to cheat the system and not pay yourself so that you don't have to claim it on your taxes. And so that's what was happening in my business. So we had to file a first and final return because within that year that we were considered an S Corp, the revenue just wasn't coming in. And this was during the pandemic. Yeah.
The first question I have for you was, how do you set up a financial operating agreement?
So that's going to be based on your business structure, right? So are you a LLC?
Yes.
Sole proprietor? Like
you and your husband.
multi-member,
Yes.
right? So that's, honestly, you all should already have it in place. So, yes. Okay. Okay.
I'm just asking what I think you would want me to ask.
Okay, but that will be included in the operating agreement. So your operating agreement is your business contract.
Oh, we did that.
Yeah, so it's your business contract. So it gives the who can do what, who can't type thing. You include your financials in that as well. Mm-hmm.
Nobody else?
No? Okay. If you all scan this QR code, and if you email me business budget, I'll give you a copy of the business worksheet as well as the personal worksheet. And that is all that I have for today. Thank you. Thank you, thank you, thank you.